Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate finance. And today we're looking at a company that is trying to shrink its way to success. So what we have here is a company called Creative Media and Community Trust Corporation, or C.M.C.T for short, filing a report on the 16th of October of 2025. Now, this is an 8K filing, which usually means something pretty important and immediate has happened. And boy, did something happen, or rather, did they vote on something important. This report details the results of a special meeting of stockholders. Basically, the folks who own shares in C.M.C.T got together, virtually of course, to vote on some key proposals. The big news here revolves around something called a reverse stock split. Now, what is a reverse stock split? Think of it like this. If a company has too many tiny pieces of ownership out there, it can make the stock price look really low. A reverse stock split is like taking a bunch of those small pieces and combining them into fewer bigger pieces. So, if you had 10 small slivers of pizza, a reverse split might turn them into one big slice. The company presented three options for this reverse split: a 1 for -4, A1 for -7, or A1 for -10 split. They're giving themselves until September of 2026 to decide how much they want to shrink their stock. The meeting was pretty well attended. Over 64% of the shares that could be voted were represented, which tells us the shareholders care about what is going on. Let's look at the votes for the 1 for -4 reverse stock split. They got 409,794 votes in favor. That is a pretty strong showing. Only 91,846 voted against it, and a tiny fraction, 3,553, abstained. This proposal clearly had the support of the majority. Now, for the 1 for -7 split, the numbers were very similar: 405,276 votes for it, 95,225 against, and 4,692 abstentions. Again, a solid approval. And for the most aggressive option, the 1 for -10 split, we see 404,237 votes in favor, 96,169 against, and 4,787 abstentions. All three options sailed through the vote. Interestingly, they did not need to call for any further adjournments. The meeting concluded without needing to postpone or delay any of the voting. This suggests they had enough initial momentum. So why would a company do this? Typically, companies enact reverse stock splits to boost their stock price. Often, this is to avoid being delisted from major stock exchanges like the Nasdaq, which have minimum price requirements. A low stock price can also make a company appear less stable or less attractive to investors. By consolidating shares, they aim to present a stronger financial image and meet exchange requirements. It doesn't fundamentally change the company's value, just the number of shares representing that value. It is like cutting a pie into fewer, larger slices. The total amount of pie remains the same, but each slice is bigger. However, sometimes this can also be a sign that the company has been struggling to grow its stock price organically. Now, looking beyond the vote itself, let's consider what C.M.C.T does. Creative Media and Community Trust Corporation is involved in film and television production, as well as owning and operating movie theaters. In a post-pandemic world, the entertainment industry, especially movie theaters, has faced significant challenges. Streaming services have become hugely popular and people's viewing habits have changed. For a company like this, a reverse stock split might be a way to keep their stock looking respectable while they navigate these tough market conditions. They are choosing to consolidate their ownership structure rather than relying solely on business performance to boost their share price. What this vote tells us is that the shareholders are giving management the flexibility to execute a reverse stock split. This would make their stock price higher on paper, which could help them stay listed on the Nasdaq and potentially attract more institutional investors who might shy away from very low price stocks. However, it is crucial to remember that a reverse split itself does not create value. The company's long-term success will still depend on its ability to produce popular content, attract audiences to its theaters, and adapt to the evolving entertainment landscape. The business fundamentals have to improve for the stock price to have lasting gains. C.M.C.T has received shareholder approval for a reverse stock split, giving management options for a significant consolidation of their stock. This appears to be a strategic move to maintain exchange listing compliance and improve the stock's market perception. The real test, however, will be whether the company can leverage this maneuver to improve its operational performance and create genuine shareholder value in the long run. The challenges in the entertainment industry are significant, and a reverse split is more of a cosmetic fix than a solution to underlying business issues. Alright, that is our breakdown of C.M.C.T's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think a reverse stock split is a smart move for them? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching. See you next time.